All right. Good morning, wherever you're watching me from. Let's have a quick one again. I want to drop this video for the purpose of some of my friends that are asking me to know what this change state of delivery is all about. Because out of about four trades that I took today, which all of them went well, there were two important setups that I highlighted for them to learn from. And some of them were so curious to understand what that term change in the state of delivery was all about. So I promise that I will drop this video to demonstrate it for them to have a deeper understanding about it. So this is a derivative trading view. I'm starting from here so that you people will understand where I got my bias from. You understand? This is derivative trading view, and in this derivative trading view, we can see that there was a pullback. There was a downward trend that has changed to an upward, which causes a pullback. A downward trend like this that has changed to an uptrend and caused this pullback. All right. In this pullback, this is a daily. This is a daily time. This is a daily time frame. At the end of this pullback, there is what we call like what I told you guys. Change in the state of delivery can happen in any time frame. Understand? So now I can even see that there is a change in the state of delivery in this daily time frame. You know, when we talk of a change in the state of delivery, it's when you see a series of candlesticks pointing to a particular direction. Like now, you can see from here. Let me use this. You can see from here. There is this two opposing candlestick or several opposing candlestick, a bullish candlestick and a bearish candlestick. Alright, after a bearish candlestick, there is a bullish candlestick that wanted to push up, but it couldn't have the strength enough to push up, and the bearish candle took over to this point. So now we call this one a break of structure. If you go to a 4-hour time frame, you see that you see that it is a break of structure. Maybe if we go to my MT5, I will show you where the break of structure happened. And then there was a there was a pullback into this point that crossed this area, So as long as it crossed this area where this candlestick was formed that time, that has caused a state, a change in the state of delivery. If there is a close above here, it becomes a change in the state of delivery. You understand? So at the end of this state, once it happens like this, you wait for it to return to you will need to return into a 50% Fibonacci retracement level. You understand? Before you start looking for entry, a 50% Fibonacci 50% Fibonacci level. 50% Fibonacci level. Where is it? Okay. 50% Fibonacci level. I want to drop it for you guys to see. Alright. So this is a 0.5. So now this retracement has gone down to below the 50% Fibonacci level, even to 0.786 Fibonacci level. So at this point, we'll start looking for we'll start looking for we'll start going down to the lower time frame to check for the setup. So now we'll go down to the 4-hour time frame, and let's see what we will see there. On the 4-hour time frame now, There's like what I told you that I always use once I'm going down to the lower time frame. I always concentrate on using my candle range theory. So at this point, there is a pin bar. There is this a pin bar, a hammer. This this blue candlestick that has a long wick is a hammer. There is this hammer that's just happened here. So on this hammer here, we'll bring our horizontal line to identify our candle range. Identify our candle range. All right. Candle range, candle range low, and candle range high. So haven't done this, we'll go down to the 15 because we identify this as a 15 4-hour time frame. We'll go down to the 15-minute time frame. That's where we'll see whether there is this change in the state of delivery. Okay, you can see what I showed you on the daily time frame that time. That is the same thing that happened here. Here, this is the change in the state of delivery on the lower time frame, on the 15-minute time frame. You see, this is where it happened because this candlestick closes above this green candle that mixed with the red candle. So when there is a series of a continuous or a consistent drop of an opposite candle that closes below each other to the opposite direction and a pullback that close above the previous resistance is what we call a change in the state of delivery. Understand? So once we see a thing like this, we'll use this area, we'll use this candle now as our order block. We will use this candle now as our order block, and then as it comes to this place like this, as it comes to this area like this, let me use this. Sorry, let me use this. We'll use this candlestick as our order block. All right, we'll use this candlestick as our order block. This is where we identify our change in the state of delivery. This candlestick here is what we use as our change in the state of delivery. And you can see how it closes above it, how the candlestick closes above it. So we'll put our sell, we'll put our sell order here, our buy order here, and put our stop loss below here, and put our stop loss below this low. So let's go to our to the candle to the MT5. So this is the 15-minute time frame, and this is where I saw it. This is it. This is where I saw it. In fact, I did not even go to the other one, to the other side before I got this. All right, I did not go to the other side before I got it. This is where I saw the change the state of delivery, and my scanner gives this bullish engulfing, which is very strong. Understand? My scanner gives this bullish engulfing. Excuse me. My scanner gives this bullish engulfing. All right, it gave this bullish engulfing, and then I use this I use this as my order block. All right, I use it as my order block, and then drop my buy order here, and then took my profit around this point. I took my profit here. Understand? Because I know that after taking this liquidity pull here, it will drop down. And I took my this thing here. So this is for volatility 10. So let's go to volatility. Let's go to jump 10 also, where I spotted the same setup that made me to win that trade. Jump 10. jump 10 index. All right, you can see that the trade has been selling. All right, so all these things, is not something that you can just discover without doing your proper analysis. You understand? You have to do your proper analysis first before you can discover whether there is anything like a change in the state of delivery. You cannot just jump to 15-minute time frame and start looking for change of delivery. You have to do the proper analysis from the higher time frame before you can conclude whether this can be called a change in the state of delivery. So now this is a 4 hour time frame on jump jump 10. So I took my analysis from the higher time frame. All right. So and how did I do it? I think I took it from even from the monthly, from the weekly. Let me go here from the monthly time frame. Jump 10. Okay. I took it from the weekly time frame. I remember I took it from the weekly time frame. I think I took this trade 2 times today. I took it 2 times today. Jump 10 weekly time frame. Okay. All right. So I don't know. My screen may look messy, but that is it. That is what I use to analyze my trade. So don't be offended if you see my screen looking this way, because there are a lot of things that need to be done before you can get a successful trading for the day. Okay, so now on the weekly time frame, this trade has been bullish. All right, it has been bullish, and there is a buy side liquidity that resided here. A buy side liquidity that resided here, which has been taken into this relative equal high. You know, it can be called relative equal high because it is very close to each other. But meanwhile, why I have the confidence to rely on that sell on the lower time frame is the fact that there was there was a candle range theory that was created here previously, which has not been tested. All right, there was a candle range that was created here, which has not been tested. Like here, you can see we have two shooting stars. These two candles has a long wick, 1 and 2. But the second one that looks like a bearish candle has taken as there's a grabber of liquidity. It went above the previous one. So that means that there is a grab of liquidity there that has happened before. So now that the market is approaching there, we will no longer expect the movement to go and take out that one again before we can expect the sell. Haven't taken out this particular one already. This one haven't taken out this one. You understand? It has taken out this one already. So now that it has taken out this one, we will not expect it to continue until it goes and took out this one again. you know so candlestick does not move like that. Algorithm does not operate like that. Sometimes when it move, it will look for a time where it can relax before it make another move. So having known this, I went down to the lower time frame, one daily the day one daily time frame, and in the daily time frame you see the same thing. So having identified that particular area from the weekly time frame, the area that I need to go is the 4 hour time frame. If you identify a particular area of concern from the weekly time frame, your area of concentration will become a 4 hour time frame. If you identify the area of concern from the daily time frame, your area of concentration will become a 1 hour time frame. If you do that on the 4-hour time frame, your area of concern should be a 15-minute time frame or thereabout, or even 5-minute time frame. You can, and if you do it in the 1-hour time frame, your area of concentration should be 5-minute or 3-minute time frame. So now I'm going down to 4-hour time frame now. All right, the 4-hour time frame. Now maybe I should go here. I should go here. I should go to the trading view to make you understand it better. All right. So on the trading view here now, we have a series of bullish movement into this area. This is the area where we discover our. This is the area where we discovered our resistance, our strong resistance that time. All right. So how we discover this our strong resistance that time, and we have a candlestick that has already taken out this the buy side liquidity on this bullish candlestick. This candle has already taken out this buy side liquidity. I think I saw this in early morning. I saw this from here early morning. How did I sell it from here early morning? Okay, haven't known this, haven't known the buyer from the higher time frame. Whatever decision I take on the lower time frame like this is binding because I have my confidence from the higher time frame. So I went down to the lower time frame, which is a 1-hour time frame, to see whether I can spot the same thing. All right, to see whether I can spot the same thing. And what did I spot? I spotted I spotted another candle range, which is this. I spotted this candle range. So having spotted this candle range and I printed this bearish candle, I entered the sell from here and then drop my SL at this point. I drop my SL here, right? This is where I drop my SL, all right? I drop my SL here. So now, even when it's almost trying to take me out, I was still relaxed because I knew that this what is it called? This shooting star will hold because I have taken my bias from the higher time frame. So let's go to the MT5 to see what the scanner gave me. I think if it sits there, you see what the scanner gave me. The scanner gave me about two confirmation, shooting star and a bear cross, right? The scanner gave me shooting star and bear cross. So I had the confidence to hold this trade till this point before I closed it this morning. And when it went down back to this place again, when it went back to this place again, I still held my stand because there was earlier discovery of a candle range which started from this bullish which started from this bullish candlestick. This is the top here is my candle range high, while the low here is my candle range low. And now it has already hit the full TP. All right, I've just closed this before I started this video. It has already hit the full TP. This is where my full TP is supposed to be. This is where my full TP is supposed to be. This is the full TP, the candle range high and the candle range low. All right, so haven't seen this, and they can and the market came into this place. It creates what? It creates a double top. All right. So sometimes one thing that you need to know, it is not all double tops that are double tops. Any double top that does not get their confirmation from the higher time frame cannot be relied upon. Understand? It can mislead you. So now when it happened like this, I saw a double tops. Understand? I saw a double tops, and sometimes I make use of this I make use of this my what's it called? My RSI, relative strength index, to know the strength, the gravity of that double tops, if it is going to hold. And you can see that my RSI has shown a slang downward. Where's my arrow? Where's my arrow? Oh, I didn't put arrow here. Sorry. Just let me do this sharply. I need to put an arrow. I need an arrow here. I need an arrow line. Insert. Okay, it's there. So you can see from here to here, from here to here, you can see how slang is the arrow. And when you check the chart one, this is chart one, you can see that it is horizontal. But when you see this one, when you see this one, you can see that it's more slant than it's more slant, more slant than this one. So that is to tell you that this market is going to pull down. And once you see something like this, if you have good capital, you can increase your lot size because you have about 80 to 90% confidence that this market is going to deliver. So these are some of the things that we see at the end of the day. Okay, now when I told you guys that I saw another change in the state of delivery on the 15-minute time frame. So let me show you now where I saw it, and one of the things that also gave me reason to hold this trade. Let me go to 15-minute time frame. All right. So on the 15-minute time frame now, you can see that there is this same thing that I told you about here. Having identified my candle range from the higher time frame, and I see this drop, this bearish drop into this place, into this side. That is a pullback, and I see this bearish pullback here, and then put out of this close below this area where we have a bearish candlestick in between the bullish candle. This this candle and this other candle that printed to this point, to this resistance area, are what we call a state of delivery. A state of delivery. So when we have a close of a candlestick at the opposing direction of it, it becomes a change in the state of delivery. So when it return back into this place, we have to place our trade. You place your trade and put your stop loss above here. Even when it is going back like this, if you have good money, you can still add more order, which is what I did on on my which is what I did on that video that I dropped that time. Sorry, on my screenshot. Let me see whether I can show you the screenshot I dropped on my channel. Let me see if I can see the screenshot I dropped on my channel. Hey, sorry. Oh, oh, will I be able to do this night again? Why is this thing being like this now? Must say be asking me to do this thing all the time. Let me try it. Let me try it. I don't want this. I don't want this video to be too long. I don't want it to be too long. I want to make it short, but I don't know why my guys are looking like this. Okay. Sorry, I don't understand what this thing is doing. I don't have the time. I don't have the time to do that now. So what I was trying to let you know is how I took the trade, and I think, okay, let me put up my history, my trade history. You see my trade history, you know. So this is what I did. This is what I did, and this is where I took my profit. All right. And the other one, volatility 10. Where are you? Where are you? Where are you? Where are you? Volatility 10. Volatility 10. Okay. Volatility 10. Also the same thing. Let me show you the trade history. Okay. You can see I took the trade here, and I took profit from here. All right. I took the profit from here. So this is how to identify a change in the state of delivery. You can identify it from any time frame. So, but there's a way you have to follow it up down to the lower time frame before you can take your trade and make a good profit. So please, if you have any question, do like to go to my comment section and drop your question. And if you want to get this, to get more of this educational video time to time, you can click on my subscription or ring my bell so that whenever I drop another one next time, you can always get it. Thank you and welcome.